Stonks. We out here moving boulders, now we ain't getting posterized. We out here making posters and we ain't got nothing to hide. We move forward like soldiers, you better wake up for the pay stub or you'll pay up. Don't make love to the game, bruh, fuck the game up. Change up, rearrange stuff to your greatness. Famous for the way up, play the game, bruh.
Never stop, I'll get it if I want it. Gotta make to myself a promise. I won't quit, keep going till I got it. I won't give up till I'm on top, yeah.
You know I'm always up.
Alright, g'day everyone. This is Rangadad, not financial advice, just the way I'm looking at the market. Yeah, I think we were talking back over here last time I was on, 7/8 or something. Obviously we broke down from that that trend line there, which was a pretty reasonable trend line. It was almost an extension of this other previous channel we were in before. But didn't really hold as one of the options we were looking at. We were talking about, we did come down. We finally broke below the 100,000 K mark, but the thing that surprised me a little bit was we sort of stopped there, 98. What was it? 98 something. Low 98, 125. I don't think that's going to be the low here. I do think we'll actually at least sweep this wick. Potentially even a little bit lower. Today, you know, that's a pretty good level for a bounce back into a bit of a vector candle recovery here. Take out the value area high. Now this value area, we need to consider that this is from basically the start of this last pump back in October last year. So it's got a fair time frame to it. But it's been pretty consistently around that 96K mark for a while. And to be honest with you, we'd probably sweep that a little bit as well, back down into the 95.5 probably. Maybe even pick up this daily 200 moving average EMA. I think that is definitely possible. Now, I actually don't think we'll hit this in this move down. I think this move down is actually probably going to pull up with maybe a little wick or a candle down into this area and then a bounce. But at the same time, we may not even do that. Like, it's hard picking bottoms like this. We have had a decent bounce today. It doesn't look like much on this, but the end of the day yesterday was pretty decent off this level. But yeah, it looks like momentum is starting to shift around. If we finish sort of where we are a little bit higher, even if we reclaim this value area high level, then we could actually just trend up into this area over the next week or so. In saying that, the end of June is typically not great for markets in general. Now, yes, we've got the war stuff going on, and that's what the news is saying this has been caused by, but it was definitely on the cards leading up to that. So, you know, price action really is what you want to be looking at. So yeah, look, today, tomorrow, sometime this week, I'd kind of expect us to at least come back down into this area again, maybe sweep this wick. If not, like if we turn around just above that wick, then that's fine too. It's still a fairly strong sign that we would move back up into the top of this range. Again, the middle of this range, like, it's really interesting. We had two such small candles in there. We were holding above it for a little while. But once we broke down properly from the middle of the range, it didn't even stop. Like the 50 EMA on the daily didn't really put up that much of a fight. So yeah, look, a couple of key levels below. The bottom of this range is the key one that I'm looking at, though. I still get the feeling we'll at least come back down here a little bit over the next couple of days and then bounce. I don't think we'll see much lower than that. I definitely don't think we'll see below that point of control. There's just too much trading has happened there. So yeah, that's kind of Bitcoin at the moment on the higher time frames. Looking for a little bit more of a pullback and then another bounce. But the way we've actually bounced off those levels has been pretty solid. So this area here is the key area that I'm looking at. This vector candle here be a really good target for a vector candle recovery. And look, we've done well. Just so you know, just explaining what this is showing at the moment, and this is still sort of a work in progress, but these are the 1 hour Bollinger Bands, 25/1 and then 25/2. And then these are the chart time frame, the 15 minutes. So I'm kind of working on some stuff with them at the moment. And it's been pretty good. Like, you know, once you're outside these, you got to look for, you know, some decent signals that you're actually heading back up. And I won't give away too much at the moment, but there are signs of when you actually bottom based on these. In confluence with RSI as well. So yeah, look, starting to slow down, obviously, into the Asia session. No real interest from Asia yet. Volumes are pretty light. The volumes over the weekend were just atrocious, apart from when it fell through the floor. Like this area in here, I posted in the Discord that price action was just disgraceful. Like through here, it was horrible. It did look like everything was prepared for a pump, and we got that pump, but it was just too quick, and we got the old Bart Simpson sort of price action where it just goes up, you got his spiky hair, and then comes straight back down. So yeah, that's what I've been talking about, is just 1 foot out the door, like take profits when you get them in this market. It's crazy how quickly it can turn at the moment when we're, and look, this does look like a market topping sort of scenario as well. Doesn't mean straight down from here, it just means it's going to be potentially choppy for a little bit longer yet. Okay. You won't worry about that. This is something to keep an eye on. The guys that buy BTC USD longs on Bitfinex have started to climb back in. I don't know if I mentioned this in the last video or not, but I've put it into Discords that once we start, the momentum on this chart starts to actually climb back out of the bearish control zone. That's typically a good time to start looking for shorts, because these guys have started to really pile in. Now, obviously, when we're in these big ranges, which we could be going into, that was that big 6-month channel that we were in for ages. Once we start to go into them, you know, it can be choppy and stuff while these guys are piling in. And we have pretty well reset too. So it wouldn't surprise me if it does take a while, we do go sideways and down. It could even be that we're going into a bear market as well. So just be aware of that as well. Okay, so previous highs. See, it was a little bit more choppy. These guys weren't as consistent in the way they played the market previously. Like you can see here, hopefully you can see here anyway. Like they were not as, I guess, mature in the way that they were playing the market. And this whole area was very much retail driven as well. This pump here was retail. So it's just a little bit different. But yeah, as you can see, we're not back at these levels in here that it was previously. So we may not be at the proper top yet, but you know, it's a pretty decent reset on this chart. I would expect more downside before we really go on the next bull run. Like, to me, this looks like the bull run's pretty well done. Same thing here, that they had a big run, and then we did correct like 30% or something from there to there. So what was that? Yeah, about 28%. So it wouldn't surprise me if we had at least another 30% correction on Bitcoin at some stage over the next couple of months. And it might have started already, but yeah. Realistically, we can still sort of stay hovering around here for a little bit. The buying isn't super aggressive yet, and I think we really need to see another little pump up, and then there'll be more buying on the next break to the downside after that. But it's definitely one that I'm watching, because the good thing is once this breaks down out of the bullish control zone, there's generally a pretty good run up. So even here, there's still a little bit of chop there, so it wasn't great. We didn't really have a big drop or anything across here in BTC USD longs. So I'm really looking at it at the extremes. That's sort of the key, I guess, at the moment. But as you can see too, once you do get into this bearish control zone, it can stay there for a while, and that's when you tend to see the big pumps. So it's not something you really trade by itself, but it's certainly something to give you an idea of the kind of market structure we're potentially going into at the moment. And at the moment, it doesn't look like there's any real sign that we'll be going into a massive bull market or a massive pump. It's more of a topping sort of structure. All right, quickly look at the Qs. So as we flagged the other day, I thought it would kind of have a little bit more, just like a couple of days up. As it turns out, we went sort of more sideways and a little bit down. Breaking out of the bullish control zone now as well. BBWP's reset. This could actually get pretty nasty. BBWP could stay low for a while. Like we could just sort of grind sideways and down, retest this level, and then bounce. So June's going to be really interesting. If the Middle East stuff resolves itself without too much hassle, then could be a decent June. We could actually get a bit of a bounce. And look, the market is flipping bearish pretty quickly, so short squeezes could happen in that case. But it's just something like we've got so many gaps below here, and the political environment is so freaking random at the moment that we could, and we have cleaned up a lot of the vector candle recoveries on most indices and stuff. So realistically, if you start to see BBWP increase and we're still heading down or even in the bearish control zone for momentum, then chances are we're actually going to pull back reasonably hard and pick up a lot of these gaps. So just be careful of that as well. ES1, yeah, it's again same sort of scenario. Momentum coming down, BBWP increasing. Oh, by the way, this Sailor shift ratio is actually an interesting one to have on your charts as well. Sorry, I'll just skip across to Bitcoin again. it's a really interesting ratio. I can't remember the dude's name that developed it, but hats off to him, because it has, like, the buy signals have been really good at getting some of the decent runs up. You got to be a little bit careful when you're in this sort of topping market structure, because the buys can be sort of false signals near the top, and even the sells can be at the bottom as well. So you be a little bit careful with it. It does go off the weekly charts, so it's a sort of a slowish signal. It's not something you trade with high leverage or anything like that, but in general, it's pretty good at getting a trend bias. And at the moment, we have had a sell signal, and that was actually a pretty good sell signal that has gone. It was a little bit of a bounce after that, but in terms of the weekly, it would look pretty nasty to the downside since that signal. So anyway, just worthwhile keep on the charts. I think it's an interesting signal. Like, if you bought there and sold at the next sell, you'd be pretty happy. Just another bit of confluence. All right, sorry, enough of that. So SPY is pretty similar, equal weights. SPY's, yeah, it's struggling. Momentum's still in the bullish control zone on the equal weights, which is interesting. It hasn't actually come down as hard as the others. That's very interesting. IWM, it's struggling. IWM's pretty well got no vector candles to the upside either, so that kind of scares me a little bit. Oh, they've had the biggest trade ever, I think it was, on the RK fund right at the top. So I mentioned it in the last video, or it was either in the video or a Discord post, but it's worthwhile. I'll cover that today. XLY, XLP. So again, consumer discretionaries sort of not really at the highs of the market. So it's kind of could go a little bit higher, but it's suggesting that we are potentially going into a bit of a downtrend on this indicator, which should, if it does sort of roll over, should mean that the markets will follow. And again, these indicators can be a little bit advanced of the market. So when you start to see momentum change on these, the market can be a little bit behind. But at the moment, we haven't actually really got that change in momentum that you might expect. So it could be a little fake sort of downside move on the market coming. Which wouldn't surprise me for a bit of a short squeeze, but at the same time, XLP versus SPY, so consumer discretionary versus SPY, it's kind of at a good level for a bounce, and when that bounces, generally SPY will be coming down. So the markets in general will be coming down. Same with the equal weight version. It's kind of key levels. Could we break down a little bit lower and pick up this vector? Yes, but there's no clear direction on this yet. It hasn't broken either way, but it's something to keep in mind. That it is at a good level to turn and for markets to potentially pull back. KRE, I think one of the financial sector ETFs actually got a massive trade on it right at the highs recently as well. Might have been XLF. Yeah, XLF got one up here somewhere, dark pool trade. That's never a good sign when they've had a run up and you're getting a massive trade at the top. Typically, they're not buying at the tops, these guys. So ITB is still struggling. Home builders still struggling. You know, these things are suggesting still that the pump in the market since the recent low isn't really because the market is super healthy. Okay. SMH, again, we've sort of recovered these vectors. There is still this other one up here, but it's kind of, you could classify that as reclaimed. So, you know, not really looking for it to go much higher. DJI Gold still trending down, really. I think that's overall, we've started another downtrend. DJT versus gold, it is above an interesting level, but like if we break above this 50 EMA, because we've tried it twice and failed, it may actually keep going up. So it's not a bad one to keep an eye on. But at the moment, if we actually break below this level here, then it could look pretty nasty on the markets, because that would suggest the economy is not great as well as the war stuff, or that stocks aren't great. Some underlying issues anyway. VIX back above this little trend line that it seemed to respect a bit. Hasn't really jumped yet, so there has. Oh, actually, there was some pretty big dark pool activity on the VIX too, around these levels. So it looks like people are piling in. They're buying the VIX pretty hard. So today's market session could look pretty red. The skew is up a little bit on Friday, not a huge amount though. Sort of not convincing that it wants to go up. The fact that we have started to pull back from that level, and we've got everything going on, suggests that I wouldn't trust that direction signal from the skew anyway at the moment. The VIX one day did come back pretty hard on Friday. That surprised me a little bit. So the options stuff, one day options, was still geared towards upside. Obviously, this is coming down. Generally, stocks are going up, but again, could just be retesting this little moving average, which I don't really look at moving averages too much on these, more trend line based. But yeah, it's been pretty low in this range for a while. Could be due for a bit of a spike, which would mean bad things for US market. TLT, so Treasuries is grinding up a little bit, and I did see a headline that someone was talking about Fed cutting next month, July, which would play well with seasonal strength in the markets, and everything else that's going on. But the financial sector, given that we've just had a massive dark pool at the top, don't necessarily think that a Fed rate cut will pump markets, because generally after Fed rate cuts, after a hiking cycle, you would actually expect downside. Generally, they're not doing it just because they think it'll be good for markets. They're doing it because there's an issue underlying the markets and something's broken. So don't fall into this narrative that interest rates are going to come back, markets are going to pump, all this liquidity is going to come back in. There still isn't that much liquidity that's coming back in. High yield junk was actually supporting an upside move on Friday while the markets were coming back. So that's an interesting little divergence there. Could just close this gap, but this is telling me that we may actually see a green day overall on the markets, potentially. Just be a little careful with that, because LQDIF wasn't heading the same way, and this is probably a better indicator. This has been trending down. We have broken out of that control zone there. So just, I guess this is flagging probably a little bit of downside potential. So disregard what I said about high yield. I think it's not really a great indicator. Copper, again, still struggling a little bit. Actually, I'll get rid of these. Don't need them. More annoying than anything. So copper, realistically, a break below there today should actually see further downside, I think. But momentum's actually to the upside. BBWP's reset, so that'll be an interesting one. Copper has been kind of leading the markets a little bit like it typically does. But whilst ever we're in this range, we're kind of in balance, and a break either way will probably show signs of which way the market's going as well. We do have a lot of news this week. Home sales. Powell's talking twice this week, 2 days in a row, and then we got GDP, growth rate, durable goods orders, and obviously some income stuff and core PCE as well. Don't really think core PCE will govern. I think the war stuff is probably going to govern the markets, but if we get some nasty economic data out at the same time, then the markets are pretty shaky at the moment. Gold still hovering at this level, hasn't really broken down, hasn't really pumped. This is a pretty good consolidation though, and even you could call it an ascending wedge. If we sort of look at it like this, probably even comes all the way back, back down into here. Not quite, but anyway, it's still a pretty decent little wedge that we've got forming here. If gold breaks either way, I'd probably actually say either way, it's probably going to run about that much. So to the upside from the break, let's say it breaks here, 3,900, you'd probably expect it to hit 4,000. If it breaks from here, you're probably talking 2,900, which would be a massive move. Like that's a $1,500 move. We do have some vector candles here that it could pick up. And just know gold kind of, when the shit hits the fan with financial markets, it can actually pull back at the same time to start with. So don't necessarily think that it's gonna pump when everything goes to the downside, because I think the big guys generally sell because they're buying it at the lows, right? They're buying down here. They will take profit on this to cover losses on other things. So be aware of that. Don't necessarily pile into gold. I've taken some profits. Might actually take a few more this week. But at the moment, I kind of do still expect this to break to the upside a little bit. I'm not expecting any huge moves, like financial issues yet on the markets. So I think people will still buy it to use it as a hedge for when things do go south. Yeah, silver's still consolidating at the high here. No real breakdown. If things do go risk off, silver could actually drop pretty hard. So I may actually take my silver positions off the table. It is still, it's holding above, like silver versus everything pretty much, it's still kind of holding. Did kind of reject this level on silver versus gold, which isn't great. But it's not necessarily in a big downtrend at the moment either. So oil still going. We've hit that key level. Hit it twice now. Bit of a sell-off there. Again, now that Trump's swung his dick around and bombed the nuclear facilities, we could get a little bit of reprieve. But based on what I'm hearing that Iran is saying, they're complaining that they've committed war crimes now, that they were peaceful facilities and stuff like that, and they're saying the UN should take action, all this sort of stuff. And I think they even sent some missiles back over to Israel and stuff over the weekend. the issue is now the US have gotten involved. It could drag others in. The Saudis have been awfully quiet too lately, in terms of what I'm looking at. China could potentially get involved due to Iran being a major oil supplier to China. And then Israel now, now that America's kind of got involved and they're on Israel's side, that could, I guess, make them more aggressive. It was an interesting play by the US to do that. And yeah, hopefully it ends well without too many more issues, but at this stage, it's not looking likely, to be honest, from what I'm saying. Go straight to liquidity. Global liquidity is still dropping off. We've projected all these things in here so far. Still haven't fallen back below the 50 EMA, which has held it up before. Yeah, it's not looking great. We want to see a bounce in this, even a grind up. Could see a decent move on stocks, but kind of needed to break above that 200 EMA as well. Yeah, Dixie's still low. It's moving up, but I think Dixie will actually have some more rejection happening around this 50 daily. What is the euro doing? Yes, the euro's pulling back a little bit. Euro to pull back in here and grab this vector candle. Could see a bounce where the Dixie comes back a bit further. Euro's got... not too much going on there. Mag 7, yeah. As I said, they've pretty much recovered all their vector candles. They are ripe for a pullback. Momentum is pulling back. BBWP's reset. You look at these charts and think there's not much chance of it actually going up in the near future. Not without a pullback into the daily 200s and at least the daily 50. Percentage of stocks above their 50-day moving average is actually coming back from a pretty high level too. So typically this is where you want to be offloading up in these levels. This is a pretty good chart actually to suggest where we might be headed. Could chop around for a little bit longer, but this is not a bad take profit area for stocks in general. Generally, you want to be buying when they're down in these sort of levels. Even 27s is not a bad level. But yeah, not looking great. Tesla's kind of coiling below a key level for me, which typically would see you break to the upside, but given what's going on, I don't know. Still would have liked NVIDIA to go a little bit higher, test this area here. So it is still in the bullish control zone. Again, no clear direction off that yet. The thing that I wanted to point out though was ARK-K. So ARK-K is a risk-on fund. And we've had a massive dark pool transaction right at the top on Friday. So key level here, previous resistance, some previous resistance around here as well, and support at that level. I think it did it on the way up as well. Yeah, resistance there as well. And right at the top of this channel, which it's been in for a while, that to me is a sign that it's more of a topping signal than it is a continuation signal, put it that way. Could be wrong, but given everything else, that kind of tips me over into being more bearish in the next week than anything. But it could only be like a week of bearish and then we get another bounce. July is a really interesting one. It is one of the more bullish months, particularly the first half of July. seasonality wise, it's generally pretty good for bulls. Yeah, Apple and Meta. Oh, Meta's looking pretty nasty, actually. That's a rejection of a pretty decent trend line there. From another confluence as well. Meta, you'd probably expect to at least come back down into the 50 daily. I think that's a pretty good take profit level for Meta. Zuck's sort of struggling a little bit with his AI stuff as well. Just bought a company that's lost its 2 biggest customers, but I think he's playing the long game. TSM, again, I would have liked to see TSM actually close that gap, but these smaller stocks don't necessarily have to. Stellantis, yeah. Car companies are still struggling. Ford's actually done surprisingly well. I don't know why. China's pretty well won the electric vehicle race too, from what I've seen. So total versus stable coins. Not looking good. We've broken that bull market support, that green one there. Thought it was going to hold a little bit longer. I think we'll still chop either side of it for a bit, but like if we pull in here and reject off that, that's a hard one to come back from. We're watching that pretty closely, actually. But for the time being, this is actually a better channel than the Bitcoin channel. So picks up right at the bottom of this first candle where we started to struggle. Picks up both of these highs here, picks up that low really well. And yeah, now we close back above it. And looking at this, we don't necessarily have to sweep this low straight away. In the next couple of days, we could just bounce straight from here and hit the top of this channel. But we are also going to have the mid band of this coming into play as well. So what we want to see is actually pretty well, once it finds its base, we want to actually see a breakout that goes straight through that the 50% of the channel, straight up into this high here. That'd be the ideal scenario. If we reject that and break back down below this bull market support line again, then it's not going to look great. Okay. Kind of expect what I'm thinking will probably happen. A little bit of that up into here, and then we come back down, then we try again, and then we actually fall off. Once we break back below this sort of level here, I think it'll be game over, bear market time, extended, couple of year long sort of run to the downside. Oh, the other thing was Ethereum. Holy crap. Ethereum is not looking good at all. Like the fact that we come pretty well straight through this little node here, volume node, which was right at the bottom of this sort of range that it was in. This is looking like a distribution. I sort of mentioned it the other day that I was thinking it was more of a distribution. Pull up into this value area high on Ethereum, right into this. It's basically the most traded area of the range as well. Pull up into there and then break back down. You'd expect Ethereum back down into 1900, 1800 sort of level. Back even like from there, you'd expect Ethereum to be pretty well done from then. Like looking at this chart for Ethereum, it's looking more like an altcoin, like a dying altcoin. Yeah, it's hard to be bullish on this right now, to be honest. Ethereum has not performed the way a lot of people thought it would. And I think it's because there are so many alternatives out there at the moment. Bitcoin's Bitcoin. It's like the digital gold. It's the one that most people know and most people want. Once you start getting into smart contracts and a utility layer, then there are so many options out there now that it's going to spread liquidity out, and it's going to be hard for Ethereum to really just go on massive bull runs. I think it'll be a slow burner. I think it'll still go higher than what it did in previous cycles eventually, but you might be talking 10 years down the track once the whole ecosystem is more mature as a technology space. But at the moment, you've got to be looking at HBAR and things like that. HBAR and Ondo are two that are getting a fair bit of use by institutions for real world asset type applications, digitizing real world assets. So I think that's probably going to be the winner in the next 5-10 years in terms of percentage gains. So interesting with Sol as well. Sol was being held up by this it was a key level for so many reasons through there, but broke below. It hit the value area low, like it tagged that and bounced, which is good because there is so little volume below that I'm looking pretty closely at sort of 111. There's a fair bit of liquidity down around 111. That's kind of the next target for me on Sol. Once we'll probably pull back up and retest this level here, the 144. At least, maybe more of a run. I still kind of like the look at this wick in here a little bit. If we go into a market environment where war's off and just there's something in the market that's going to hold it up, then yeah, I can see Sol making a run. But just looking at where the interest is and stuff at the moment, I kind of, given how strong this was as support and resistance previously, I kind of expect us just to pull up into 144 and then fall off again and down around, potentially even down into that 94, 95 level, just at the bottom of this volume area, which would pretty well sweep this. I think that's a vector candle, yeah, vector candle wick there. From there, it's hard to predict. Really depends what's happening macroeconomically. So just to finish off, we'll have a quick look at some of these indicators. A little bit of cumulative volume delta increase at the moment off these lows. The whale index is holding strong, actually. I would say it looks like there is a bit of interest here, only slight uptick though. Kind of want to see a more gradual uptick, more gradual run up, but it's kind of, we are still holding, or actually the whale index is holding higher than what we got to at the bottom of this level here. So the whales, I think there will be another run up towards the top of that channel. So again, kind of bias is over the next couple of days to week, maybe a little bit of downside into the end of June and then a run up. But I'm not expecting much more than the top of the channel at the moment. We'll see what happens when we get there, but at the moment, top traders are a net long as well. So, and they did start sort of piling on the way down here again. So that's something to keep in mind. Bit better view here. Spot CVD has started to trend up. Worries me a little bit though that the top traders have actually started to reduce their long positions as we've done this run up. Not a huge amount though. I think there's just a little bit of profit taking. Some of the guys that were going hard on the way down here, they haven't really taken profit yet. So I think, and even like the guys that were going long on the way down here haven't really taken profit either. So again, I think we will come back up into the 105s, maybe a little bit higher even over the next couple of weeks. But yeah, that's essentially what I'm looking at. Liquidity, yeah, liquidity levels wise, last 24 hours, yeah, decent targets down here around 99, 98.5. Not really expecting him to sweep that yet though. Still a fair bit above. If we go out to the last 2 weeks, what are we looking at? Oh, it's light. It's light. Interesting. Haven't really had them pile on yet with longs. I'm kind of looking at this area up here being a pretty juicy target, but the top of the channel is going to be around somewhere around 107, I'd say 108, so somewhere in here. And again, we could sort of bust out of that, you know, a day up, day back, just to sweep some of this liquidity. If we do that, then I would be looking at the bottom of the channel again afterwards. If we break out, retest the top of the channel and move away again, then that's actually quite bullish. They're just the things to look out for. The other thing that interests me is just how much smart money seems to be interested in such a small pullback. I don't think it's the end of the pullback yet though. Like, they're not all in or anything, and retail is still quite heavily bullish. So, you know, that's kind of suggesting we do get a little bit more of a pullback this week as well. I bet some pretty big transactions here. I'm surprised we didn't actually get a sell of them through the high here. That kind of looks to me like a little bit of a buy there as well in the dark pool. So yeah, just again, that's kind of suggesting could actually start to move up again a little bit. And I don't think these were sells either. I think these were buys. So the fact we haven't got any major action at this level, I do think we will sweep back above that. Nothing massive on Fidelity's Ethereum fund. I thought that might be of interest, but it's not. Grayscale sucks. Looks like Coins had some decent trades on it as well. Oh, yeah, okay. That's not looking great. Some big trades at the highs on Coinbase. Not looking super exciting. Mara. XLU. Yeah, not seeing anything of interest that would freak me out. I think I've already got XLF up, but yeah, some big trades on XLF. Big trades at the highs, all throughout the highs here. 44th largest. Yeah, that's pretty decent on such a big fund. See, Marathon Digital though is getting a pretty big trade right at the low here. So, like the 11th largest, it's 14th largest. Sorry, nothing to sneeze at. Could be a buy. So it's looking pretty choppy for stocks. Bitcoin may get a little run up. Stocks may go a little bit sideways, maybe a little bit of a sweep to the downside, but it looks like they should pull back a lot further. It's just we've kind of had a pullback in time. We've been going sideways for long enough that we don't necessarily have to drop that far. So the daily 50 and the daily 200 are probably going to be the targets for me on stocks. Yeah, that's XLF. XLE, so Energy's had a bit of a trade at the top. Not seeing XLP just freaking sideways. Consumer staples. So yeah, no, I mean this could be accumulation on consumer staples as well, but not massive trades into them. It'll be interesting to this week's trading to see whether we get a big move up in consumer staples. Because if we break the range to the upside on consumer staple, you'd kind of expect that to be a sign that the markets are going to pull back a little bit harder. Yeah, I mean, kind of, maybe. Yeah. So it's hard underrated at the moment with everything going on with the wars, but, you know, choppy. This could just keep going from here. That's really not, the liquidity down here is really not that attractive. So it could be a range play. Top side of the range, I think's target over the next couple of weeks, but seasonality is never 100% either. So whilst July is typically bullish, don't necessarily take that as a guarantee. Okay? Price action will be key over the next couple of months. All right, guys. Catch you. Won't catch you tomorrow. Might catch you Wednesday.